Good afternoon. Today is Monday, September the 11th. The time right now in Singapore is 12:39 in the afternoon. And let's look forward to another week of trading. And we have seen the US equity market basically close on a firm note on Friday. And this is likely to cause the Dow Jones either to continue to edge higher. But I think we are beginning to see a different pattern emerging between the Dow Jones and the other major equity index. Now, for this, I think the market has the potential to actually continue to go higher. Top side is about 35,426 to 35,687. So let's watch out for a possible three-wave equality rally towards this bracket of prices before the market unravels to the downside. Whereas the Dow Jones looks very, very firm. We are also seeing the same thing happening in the S&P 500 and the Nasdaq. Basically, what happened last week was the market actually closed on a firm note. The high traded in the E-mini S&P 500 is at 4,527 even. Now, this is coming off from the high of 4,447 and three quarter on the early part of September. So we can see that there was a bit of a gap up here. And likely the market may actually attempt higher, but I think the market has already finished its three-wave rally. So I think the prospect is either way. I think there is a good chance the market may test back the 4,534 and a quarter to 4,560 and three quarter. But I think the bias is to the downside, in my opinion. And if that's the case, I think the first area of support is probably around 4,414.5 to 4,429 even. So let's see what happens between these two barriers. I think the market may test the upside first, failing which I think it will come back down. And in the Nasdaq itself, we are seeing something quite similar, but unlike the Dow Jones and the S&P 500, we can see that the rebound in the Nasdaq is not as firm, largely because tech stocks was basically sold off in the last 2 days of trading last week on the back of a falling Apple share prices. And we can see that the price in the Nasdaq is at 15,157.5 last week. And this may cause the market to come back down, because what we are seeing here is also quite similar in the S&P 500. We have a three-wave equality bounce to 15,661 and a quarter. And I think the market may have already hit its peak and is getting ready to come back down. Bottom side, I think the support initially will be a 14,973 and a quarter to 15,052 and a half. So let's see which for a reaction over here. Now, over in Asia itself, we can see that the Hong Kong market is basically coming off again. And this is on the back of a very weak Caixin Services PMI number last week, and we can see that for 4 or 5 months in a row, we can see the services PMI has been falling, although it is not in contraction zone, but it's definitely not doing well as far as equity market is concerned. So this could actually be what is driving Hong Kong market as well. We can see the sentiment is pretty poor, and if the market do drop below this most recent low here at 17,539, it may actually go a little bit lower. Nearby support is probably in the region of 16,823 to 17,744. So do watch out for further movement along this area. Okay, let me adjust this. And over in the Nikkei, we are beginning to see prices are back falling again. And what happened is that over the weekend, the governor of the Bank of Japan actually came out to talk about yield curve control, and I think that he's hinting that he may adjust this monetary policy, meaning to say that he may allow yield to go higher. In terms of yield, we're talking about the Japanese government bonds, and that has been the principal strategy to make sure that the yield do not climb higher than inflation. And right now we are beginning to see inflation stabilizing, but last week we see inflation has actually come back down. And we also saw a revision in the Japanese Q2 GDP from 6% to 4.8. So basically, this is causing the market to unravel a little bit. So if the market cannot hold above 32,100, the next level of support is likely to be 31,540 to 31,730. So do look out for a possible break below this level for the market to extend lower to the mid 31,000 levels. And over in the dollar itself, the dollar is beginning to crack. I think the high 105 12.5 is although it didn't quite reach the ideal level of 104.48 to 105.48, I think the market right now is right for a pullback, and this pullback may actually have a chance to go down and test a 102.85 level. But in in between their intermediate support levels. First will be 104 levels, followed by 103 half levels. So do watch out for these two barriers to actually hold the price temporarily. I do not expect the market to come all the way to 102.85 straight away. I think it will unfold in a three-way pattern. First into 104, bounce, and then come back down to test a 103 to perhaps a 102 levels. So do watch out for this possible move in the dollar index. Now we are also beginning to see principal currency beginning to rebound. You can see this morning we have a strong rebound in the dollar, euro dollar. So this may actually exacerbate in the London when London opens in about 2 hours from now. So if that's the case, there's a good chance the market may actually test this level first. I think this bottom level here is 107.70 to the high of 108.10 levels. So this will be the first barrier to higher prices, after which the next level will be 108.38. But by and large, very much like the dollar index, this one has the potential to go all the way to 109.45, but it will not go up there in one single fall. I think it will probably trace a three-wave rally. Okay, so the first barrier will be somewhere around possibly, like I say, 107 area, 107.90 areas, 107.90 areas first. And if the market can punch beyond, I think the market will test the 108.40 levels, come back down and push higher towards the 109 half levels. Okay, over in sterling, we are also beginning to see something quite similar. The market is holding up very well at 124.30 levels, and now we are beginning to see a bounce. Initial resistance is likely to be 125.60 to 125.70 areas, of which I think there will be many layers of potential resistance as I list up here. There are right now, I think what I can find is 4 layers of possible resistant areas. So each one would have to be conquered before the price can go higher. Okay. So in the Aussie, we can see Aussie have a major run, which is quite a big sad thing, because yes, last week on Friday, I actually attempt to buy, but then the market come back down and take out my stops, and I did not lose money, but I was taken out of a fairly good position. I was hoping for the market to come down a little bit down to the 0.63 half level. So unfortunately, this did not happen. So prices is now rallying. The last traded price, as we can see right now, is markets at 0.6435, and it's likely to go into the first area of resistance at 0.6440 to 0.6480 levels. Okay, ultimately, I think the market will challenge at 0.6520. Dollar yen is coming off in a big way now. Initially, the market has a high of 147.87, although it did not quite get into the ideal range at 148.25 to 149.70, which is the ideal level to sell. Again, very much like what I said earlier on, the Bank of Japan governor came in to actually mention about yield curve control, and that is seen to be changing their monetary stand, and that is the reason why dollar yen is unraveling right now. People who have been long the dollar yen right now is trying to get out, and there's only one exit. So this may cause the price to continue to escalate to the downside, especially when London opens. When the London boys wake up, they will see that dollar yen is very far away from what it used to be on Friday. Now the market has dropped more than 150 pips already. So immediately the bottom will be around 144 half to 145.60 levels, and this 144.40 level will be crucial. I think the market should be able to hold on the first run, but if it does go under, which is not unlikely, then of course it will be something very, very different. Okay. So in the dollar Canadian, we are beginning to see the same thing. Dollar basically wholesale has been coming off since last Friday firm closing. The high traded last Friday was 137 more or less, and the market right now is trading at 136. So we have come down almost 100 pips now, and it looks like it may continue to go down towards the 135 levels to as low as 135 to 135 levels. Okay, so do watch out for those levels. And in the crude oil prices still is very, very firm. I was hoping to buy at crude oil, but at anything above $80 is a little bit hard to stomach. So I'll be waiting patiently for some kind of a more sensible pullback. Not sure I'm going to get one, but right now the sentiment seems to be very firm, because Saudi Arabia and Russia has agreed to extend the production cut all the way to the end of the year instead of at the end of the month. So that is putting a floor underneath the energy prices. So crude oil have a high of $88.08. Nearby support is probably around $85.50 to $86. So let's see if we can get a market to hold at this level before it propel higher. Upside the potential has a market has the potential to go up to $92, perhaps even $94. So anywhere between these two, $92 to $94, market could actually find a top. Okay, so in the meantime, it's up to individual whether they want to take the risk to buy at such high prices. And in gold itself, gold did not really move. Gold has been coming off last week on the back of a resurging dollar. Now that the dollar is coming off, there's a good chance the gold market may actually find a floor. So right now the market has to conquer above the 1,929 levels. Next level to conquer will be 1,940 before it can go higher. But by and large, let's see what happens. The market is bullish, but there is a possibility market will actually do a three-wave to come back down over time to test the 1,900, which is a major key support area. In silver, we can see silver has not reacted yet, but we can see the market has been holding up very well around the $23 per ounce levels. So top side is possibly about $23.50 to $23.70, 60 cents, and let's see if it can punch beyond this level. Bitcoin is not moving yet, but I think it's about time we may see a big move. I suspect because the June low is so nearby at $24,840, I suspect there will be an attempt to try to search for stock below these levels. And if we see a sudden drop and then a sudden reversal, that could be the sign that the market has already bottomed out, and we can take the cue from there. Okay, until it happens, maybe this is what we can do. We can only watch. Okay, but for those who are very aggressive, you can start to accumulate position at $24,640 all the way down to 24,000 levels. Okay, so this could be a game plan for you. Now, in the meantime, this is all I have for you. I'll come back to you tomorrow morning with another update. Bye bye.